Welcome to part 7 of the Big Score Take Action Plan, Managing Your Debt Strategically. How you manage your revolving and installment debt is one of the best kept secrets for improving your credit scores. Believe it or not, there is a specific strategy to it, and learning that strategy will allow you to maximize your credit scores and will help you avoid making mistakes that can drop your credit scores by 100 points instantly. Today I'm going to give you some great tips that will help you achieve an increase in your credit scores when you need it the most. Now, per Fair Isaac & Company, the creator of the FICO scoring model, 30% of your credit score is made up of how you use and manage your debt. It's broken down into two categories: revolving debt, like credit cards, and installment debt, like your mortgage or car payment. Now, in my experience of working with thousands of credit score improvement cases, I'm going to say that 25% of this factor is allocated towards revolving debt and only 5% is allocated towards installment debt. It only makes sense that scores are impacted when a high percentage of your available credit is being used, because it gives the impression that you are overextended, making you at risk for paying late or not paying at all. So here are the rules. If you want your credit scores to improve, keep the balances on all credit cards under 30% of your available limits on statement date consistently. If you want to maintain credit scores, it's okay to keep the balances on all cards between 30 to 49% of your available limits on statement date. But once your balance goes over 50% of your available limit, you start losing points. According to Fair Isaac & Company, again, a maxed out credit card can cost up to 80 points, even if there is good history on that account. The logic behind that is that statistics show that individuals who carry a balance of over 50% on revolving accounts month to month, well, they appear to be living off of their credit cards and more likely to default on their payments. While this doesn't make a lot of sense on a low-limit credit card, all accounts are treated the same. Now, what I mean by statement date is the date that your actual statement is printed or emailed to you, not the due date. And what most individuals don't realize is that the balance that is printed on your statement is the balance that gets reported to the credit bureaus, and that is the balance to limit ratio that gets calculated in your credit scores. So make sure that you find out from each of your revolving account creditors what date they print your statement and make payment before that date. Now, some more tips to help you make sure that you're maximizing this 30% of what makes up your credit score are as follows. Well, make sure that all of your open accounts and recently closed accounts with positive history are reporting to all three credit bureaus. I emphasize positive because if you have just had a recent late added on an account, or you are over the limit on a credit card and you're about to enter into a loan transaction, you do not want to go out of your way to make sure that the credit bureau is aware of that negative account if it is not reporting yet. Another good tip is make sure that your credit limits are reporting to all three credit bureaus on all open credit card accounts and closed accounts that still have balances. However, if accounts are closed and paid off, there is no need to worry about limits reporting. Make sure that balances on your installment accounts are correct. Auto and mortgage lenders are notorious for being months behind on reporting updated balances to the credit bureaus. Now, if you have to charge more than 30 to 50% of your available limit, then make sure that you go home and pay that balance down immediately. That night on the telephone, don't take any chances. You just need to make sure that your balances stay below 30% of their limit on statement date. Now, when you're paying off credit card balances, that are over that 50% area, you want to pay those balances across the board. In other words, it will not help your credit scores if you pay one down at a time. So if you have three credit cards at 80% of their limit and you cannot pay them down to 30 or 50% of your available limit, pay them down in equal increments so that the balances decrease at the same percentage rate. Another great tip is don't open accounts that you don't need. Just because credit is offered to you does not mean that you should accept it. When you receive one of those pre-approved credit card letters in the mail, in most instances, your credit report has not been pulled yet, so you are not approved for the account. Now, installment loans are there for a reason. So paying off your car loan early may be good for your budget, but it will not improve your credit scores. In fact, it can actually pull your scores down because you will have one less active installment account in your mix of credit. Now, the scoring system wants to see that you can follow a payment agreement over a certain period of time, like $250 per month for a period of 5 years with no late pays. So don't pay off auto loans early just to help your credit scores because it doesn't work. Don't go over your credit card limits, even if just by $1, because doing so could cause you to lose 100 points from your credit score. You get a double penalty. The system interprets that you cannot hold to a creditor's agreement and also that you were overextended, and both carry a very negative impact to your credit scores. So, how you use and manage your debt has a tremendous impact on your credit scores, and in simple terms, it has the potential to put you over the top when it comes to achieving credit scores high enough to get you preferential credit treatment. So check those reports and make sure you keep your amounts owed well within the parameters that we've talked about today, because when you do, you can rest assured that 30% of your credit score is in good shape. Thanks for tuning in to today's session of the Big Score Take Action Plan. Remember, the professional who sent this video to you is someone who is committed to not only helping you find that perfect home or qualify for mortgage financing, but is also committed to your overall financial health. And credit is a big part of that, more than ever before. So if you like this information, call and say thanks, and we encourage you to share it with your family and friends. You can also visit my site at creditresourcecorp.com to learn more about credit score improvement and to order your own copy of my book, The Big Score, Getting It and Keeping It. This is Linda Ferrari saying bye for now, and remember, it's never too late to take action.